Going on, everyone? I hope you're all having a wonderful day. We're going to be doing things a little bit differently today. Today, it's just going to be reviewing kind of what occurred throughout the day in today's price action. And I'm going to be giving you guys kind of a step by step of how I break down my 30-minute time frame using market profile and some of the terminology and techniques that they use when identifying a trend day, kind of like we had today. So first thing that I do whenever I'm looking at our 30-minute time frame, I'm going to go ahead and make this kind of fit in the screen a little bit, is I want to identify the days, and this is of course after all the price action has happened and we've traded throughout the day, and kind of reviewing it at the end of the day helps you identify it in the future, right? Whenever you have like tomorrow, if we have another day kind of like today, you can identify it and see where your entries can be and how to trade against it. So first things first, we're going to mark our low and then our high is how we're going to do this. Let me get this out. So we're going to mark our low and our high. Our low today was 38.95. 38.95. So let me 38.95. So we're going to mark this green and we're going to mark this as low of day. And then today's date so that we know what low of day it was. Okay. Next things next, we're going to mark the day's high. All right. Today's high was 39.99. Flat, straight on the dot. 39.99 even was the high of day today. High of day, and all this has significance when trading against it in the next trading session. Excuse me. And then we're going to mark this kind of red to kind of show that there might be some type of resistance up there. Another thing you may notice is I have a balance area marked or a previous zone marked. I'm going to get rid of that actually. We won't worry about that. So don't worry about this line here. That's not going to have any significance right now. All right, next thing I do on my 30-minute time frame, because in whenever you're actually using a market profile software like Window Trader, it'll have things labeled a lot differently. It's still a 30-minute candle or a 30-minute bar, but because TD Ameritrade doesn't automatically label it A through M, because there are 13 time frames in the day, 13 30-minute time frames in the day. Each one is labeled alphabetically. So that we have a better identification of what happened during that time frame, instead of saying this happened in the first time frame, this happened in the second time frame, we went up in the third time frame, and in the fourth time frame. Instead, I'm going to go through and I'm going to label each one of these, and it is a little tedious, but ultimately it's something that is good to know, and good repetition will help you in the future of knowing what to do. So first time frame is called A, and then so on and so forth until you get to M. Second time frame is B, so we're going to label it B. Then the third time frame is C, we'll label it C period. The fourth time frame is D, and then so on and so forth until you get to M. So we got E, then we got F. So if you don't know your ABCs, now's a good time to learn them. G, we got H period up here. H, I, then we got J period, J, and then we got what we call the Three Stooges, Curly, Larry, and Moe, K, L, and M. So we got Curly with a K, we got Larry with an L, per usual, right? And then what do we have up here? We have Moe. Good old Moe. And the last 30-minute last three 30-minute time frames, or the last hour and a half of the day, tend to be the most volatile. They usually have the most volume in those last three time frames. So they act kind of like the Three Stooges do, as they are sporadic and will cause a lot of hurt to those that are uneducated. So now that we have our label, our time frames labeled, we need to identify what happened throughout the day. And as you can see, we traded up, right? What happened to cause us to move up higher? Well, initially, it would be what is called short covering, right? So how do I know it's short covering? Well, and over the past several days, the market has been doing what? It's been moving down, right? We've been setting lower lows, lower lows, lower lows, and lower highs on our daily time frame, and you can see it trending lower here on the 30. And then finally, we kind of came into some type of trading range, and that's what you see me mark early. Was I had our balance high marked and then our balance low. So once you start to see some type of consolidation, like you have here, where I'm about to highlight, once you have some type of consolidation like this, once you have consolidation like that, sideways movement, that's what you call balance. The market is in balance, it's trading in a range. So you see it just kind of move either down to a certain level and then up and then back down and then up until it finally comes out of balance. And whenever it comes out of balance, it tends to move pretty volatile. Or you tend to have more action to either side, up or down. So seeing that we had our balance area, now I'm going to go back in. I'm going to mark this balance high. Balance low isn't as important because we didn't get near that today. But the balance high was 72.50 here, which was also this daily high back from the 14th. I'm going to label this balance high just so we have it on our chart and I know the significance of it. And then I'm going to make it look a little bit different. I'm going to put this there like so. We're going to make it red. That way I know it's pretty significant. Balance high, daily high. And then I'm going to put 314. That way I know what day it is. Okay, so now that we have that balance high marked out, clear indication of red, let's look at what the other day did. So normally you mark your daily highs and your daily lows on your charts. That way you know what to expect when you get above them. Typically, whenever you get above a previous day's high, you usually find short covering. So just for the sake of it, we're going to look at it like this. So A and B period. So now we're going to get into what happened throughout the day. So A and B period open up in the previous day's range. So meaning it's pretty bad risk reward. The market's been short and then we came into some type of trading range, been chopping back and forth. Well, since we didn't get near the balance low, or we got near it and didn't take it out, shorts began to cover yesterday and the previous day, and they began to push this market up a little bit higher, kind of giving you an indication that sellers were kind of getting tired. People that were selling were beginning to cover their shares by buying those shares back. So that's what happened on this day, right? And we rotated up and created a new high on the day. Well, today we opened up inside of the previous range, but in the higher range versus the lower end, right? So we opened up and we attempted to push lower, could not. We didn't get near the previous day's low. So initially you want to say that you want to stay out of the market, usually the first two time frames, to let something form that we call the initial balance. Now, what is the initial balance? The initial balance is the first two time frames, or the first two 30-minute time frames to form, right? So A period and B period, or the first hour. You can look at it as a first hour candle, but the initial balance is what is being formed in the first two time frames, and that usually indicates how the rest of the day is going whenever we take out either side. So here we can see we had A period open up, pushed down lower, and then pushed up higher, and then didn't take out the previous day's high. B period pushed down lower, couldn't take out A's low, right? Couldn't take out that 30-minute time frame low, showing sellers really weren't that serious, and we began to rotate back up as buyers step back into the market. Then B period takes out A's high, so we set a higher high on our 30-minute time frame, meaning some type of support is coming into the market. Buyers are becoming more comfortable. So we have our initial balance set. Now I'm going to mark these just for temporary reference. I'm going to mark our balance high here at B period's high at 25. Now normally I just have these areas mentally marked in the intraday whenever we're going through it or looking at it. But that is our initial balance high. And then the day's low, which I already have marked right now, is our initial balance low. Now, usually whichever side you take out, either the upper end or the lower end determines how the rest of the day is going to go. Well, you can see here in C period, once it opened up, it didn't take out B's low, it didn't take out A's low, so it didn't take out the initial balance low. And then shorts, and it even gets back to the open. So that's another thing you want to make sure, right? If you're buying up in this market, you don't want to get back to the open. So buyers are comfortable. They begin to rotate this thing back up and they take out B's high. Now, once they do that, anybody that was shorting or selling shares here to hope to maybe take out the initial balance low and then get the previous day's low, they don't get much, right? So they begin to cover, causing what is called a short covering rally. So C period pushes up, it takes out the previous day's high. More shorts, more sellers that were selling against that high begin to cover their shares, pushing this market up even higher. And as you can see, C period pushed up pretty good in this 30-minute time frame. Really good range in that 30-minute time frame before settling out and creating what we call a set of single prints. So now that we know that we've taken our initial balance high, we are doing something what is called one-time framing up. Now, what is one-time framing up? One-time framing up just means we're taking out a previous time frame's high. So technically, we did it in B period whenever we took out A's high, and then we did it in C period when we took out B's high, and then we create a new high, right? And then same thing in D period, we take out C's high and create a new high, and so on and so forth until a time frame takes out a previous time frame's low. Once that happens, then the one-time framing up stops, basically meaning trend is starting to slow. So now that we've identified our initial balance, we've taken that out. We took out the previous day's high. We have created what is known as a set of single prints. Now, what is a single print? So I'm going to show you. So you need to mark B's high, which was 22.25. We'll need to mark 22.25 level, that 30-minute time frame high. I'm going to label it green, and you'll see why here in a second. And then we're going to say single prints. Well, just for, we'll say singles for now, because I'm going to go back and identify something else. All right, so C period closed right here. Let's see where C period closed. C period closed at 39.49.25. 39.49.25. So single prints. So we're going to say single here as well. And we're going to put a P. And we're going to label it green. Okay. So what is a set of single prints? So you can see here in A and B how we kind of chopped around, right? In A and B period, how there's 2 time frames and then even 3 time frames that went through the prices of 39, 22, 25, and 38.95, right? Multiple time frames went through that range. Same thing like here, all these time frames went through this price range. So on this day, we create a set of single prints, meaning only C period came through the 39.22.25 level up to the 39.49.25 level. So initially, it kind of looks like that. Only that time frame has gone through. If you're paying attention to the right-hand side, only that time frame's gone through that area. And then you have D period open up, and it pulls into that set of single prints. So now it's not only did it push through that 49.25 level, it ate away at our set of single prints. So now there's only set of single prints from 41.25 to 39.22.25, right? So it acts as an intraday gap. And like any gap, if you typically want to see it fill or you want to see it hold. And in this case, in an intraday, you want to see it hold and you want to act as support. You want to see buyers step in when it pulls into this area. So if I were to pull this back up to where C closed here at 49, just around that 49 level. And if I were to go to our, excuse me, if I were to go to our 5-minute chart here, and if I were to show you here on our 5-minute chart where the single prints are, you can see D pulled back against the 9 EMA and then bounced at that 41.25 level. So we pulled back in and we found buyers. So you can see once we moved up throughout this area and we pulled back into it, we found support and we continue to rotate higher. That's all it is. It acts as support. So where there were sellers, there are now buyers, right? Buyers in this range. So single prints start now at 41.25. And then if we look at our 5-minute chart, you can see that, right? We pulled back into it, held it, and then we bounced off that level and rotated up higher. So now that I've identified one set of single prints, we're going to look to see if we have any others. And then sure enough, we do at C's high to E's low. So when you had more shorts that were shorting up here, they got out of their positions once D popped C's high and we pushed higher, right? We got near our balance high. Keep that in mind. But you can see here, once D period popped C's high, so once that 30-minute time frame popped this 30-minute time frame's high, we pushed up, creating another set of single prints, continue to one time frame up, and then E pulls into it. So if I were to mark here, you can see E period pulled back into it a little bit, and then F period pulled back into it even more so, but we still held it. And that is because we pushed up into our balance high where we're expecting to find some resistance. So once we pushed up into it, an E period could not create a set of single prints and hold them, meaning a true trend. We begin to rotate back over. So anybody that was buying this market up in order to get to this area, they were getting out of their positions. And then you had sellers step into the market here, which made us rotate lower. But you can see in F period, we still held this set of single prints, so they acted as support. So basically in the intraday, whenever we pull in against it, pulling back against it, you can take a buy position, you can take long positions to see if this holds and rotates up higher. And sure enough, if anybody that did take a long position in F period held until the new high of day, they got paid, right? So once this thing rotates up higher, they get paid again, all right? So now we've identified two sets of single prints. We've identified two sets of single prints now, back to back. And then we continue, F period stopped the one time frame and up, right? So we pulled back, took out a previous time frame's low, stopped the one time frame and up. And then G period takes out F's high and E's high, and then we get above above our balance high with good extension, right? So G period pushes up, takes out both F and E's high. After we held this support down here, we rotate up, and then H period continues to one time frame up. So we resume one time framing up in H, because typically you want to see 2 time frames back to back, one time frame up. Otherwise, you're just going to be doing a whole lot of chopping back and forth, right? Saying it's one time framing up, it's one time framing down, etc. So H period rotates up and then it pulls back. So what we're about to show now is an example of single prints failing. So we had an initial set above E's high where G period closed, and then you're going to see we had enough supply to fill the intraday gap. So initially, if you're paying attention to the right hand side of my screen, you had a set of single prints and it looked like that. And then H period opens up, it pulls back, and then it fills in that gap with a little bit of supply. And we hold a very small set now. And then I period opens up, it pulls back, and then it fills in that set. meaning they no longer exist. There's no longer buyers where there once were. It got filled in. And then you can see that I period stopped the one time frame and up. J period began to one time frame down, and then K period began to continue to one time frame down until it had a reversal bar. Now that's why I say curly, Larry, and Mo, because they are very volatile. So K period pulled back. We're going to call it back tested the balance high, the daily balance high here, back tested it, and then found buyers there and rotated us back up, having a reversal bar. And then L and M period go and set new highs on the day. And then that's the gist of it. That is, that's how we identify, or that's how we break down our 30-minute chart on using market profile, single prints, one time framing up, etc. Now, what are we looking at here now? We're looking at what is known as a double distribution. So inventory, if you think of it like that, inventory was being absorbed down here, and then it got distributed up here. Why didn't it get distributed here or here? Because you need to see whenever you have consecutive single prints back to back, that is just price moving up higher, and then it gets distributed up here. So you have buyers and sellers here. Here you only had buyers. Here you only had buyers. And then you had buyers and sellers up here. So this is your upper distribution. This is your lower distribution. And that is how you do technical analysis on a 30-minute time frame using market profile terminology. And it may not be as clear cut and or simple, but it's very good references to have in the market. And I'm going to show you why here. So as you can see, I have this trend day down marked, right, where I have high of day and afternoon rally high, single prints fill, where single prints are, single prints. All right, I'll have all these destinations. And then if you look here, how we pushed up into these sets of single prints. So let me try to do something wild here. So you can see in E period, we pushed up into a set of single prints. Now, normally you would look to see if this either fills, a lot of times in the intraday, where they once acted as something to lean against, whenever we're backfilling or back testing them, they're typically become areas or targets to fill. So on these days, you were looking to sell against them because they were strong reference points. And then on a day like today, when we're strongly moving in a strong trend up, they become destinations to fill. That's why you want to have them marked on your chart. So as you can see here in E period, we pushed up and we filled that set of single prints initial. And then we got into, so I'm going to go ahead and start clearing out some of these destinations. So single prints filled there. And then we pushed up into another set of single prints. Didn't quite fill them. So we still had a little bit of supply up there. We back off initially. And then when G period pushes up, we have enough to fill in that area, that gap. So we push up. And then we continue to grind higher. And then we get into another set of single prints back from this day. And as you can see, we didn't quite fill them. So showing that there's still some type of resistance, some type of sell pressure in this area from 39.95 to 4,003. It also happens to be a very visual area, the 4,000 level. So you want to see us reject here if you're a seller. You get above that, you will continue to grind up higher and take out the rest of these destination points. So with that being said, that's how you do technical analysis on 30-minute time frame. That is what you look for. And yeah, we'll catch you guys in the next one. Thanks for stopping by. If you liked the video, if you found it helpful in any way, please drop a like, leave a comment below. If there's anything I could have explained better, I know I kind of just ran through it, but that's how I look at it. That's how I label things, and that's how I move it. Of course, there are different ways you can do it. You can, highlight boxes like this, right? Some people like to do like a support and resistance type of thing, where they mark it, and they do all this, right? But for me, it looks ugly. I like my charts to look a little bit cleaner. That's why I mark it with lines. But anyway, thanks for stopping by, guys. We'll catch you tomorrow. See you.